While the markets are selling off and investors are rotating money into bonds, there is one upside in all this uncertainty. Mortgage rates, they're ticking lower. But with Friday's jobs report looming, is it time to lock in your mortgage rate right now? Diana Olick gets some answers.
This winter's wallop has sent a chill across the economy, but it's also helping some borrowers by pushing mortgage rates lower. As investors flee the stock market, they're buying bonds, sending yields lower. Mortgage rates follow those yields.
Some are viewing this as a bit of an anomaly so far, but it's really only limited by how bad the situation gets for equities and the other markets that investors are leaving.
Last week, the average rate on the 30-year fixed fell to a 3-month low, and rates dropped again today on weak manufacturing data. For the best borrowers, 4.25% is a real possibility. It's a quarter-point drop in a week, barely $30 a month saved on a $200,000 loan, but it means a lot more.
If that 0.25% happens to take rates to, say, the lowest they've been in several months or a year, then that psychological effect not only affects borrowers individually, but the industry makes a bigger deal about it.
The downward slide in rates is really a double-edged sword. Rates are only going down because of concern in the broader economy. That concern has investors fleeing the stock market, and what's bad for the market is not good for the housing recovery.
Affordability is not just about mortgage rates. It depends on your income. And if the economy does worse, more people stay out of work, incomes don't rise, that really hurts affordability.
Despite the rate moves, credit is still tight as ever, and potential buyers remain leery.
I think the biggest concern is consumer confidence, right? It's just a question of getting enough buyers to the table. Are people going to pause because they're not sure about the broader economic conditions? That's what builders are really worried about.
The decline in mortgage rates may be short-lived, especially if the employment report Friday delivers good news. That's why borrowers looking to refinance might want to lock in now and hedge their mortgage bets while the hedging is still good. For Nightly Business Report, I'm Diana Olick in Washington.